Hello, I'm David Frazier, aka the Market Monk. Well, we had another positive day today here in the U.S. stock market with the major U.S. stock market indices moving higher again today. Very modestly, but they did move higher. In other regions of the world, stocks were mostly unchanged. I'm speaking really of Europe, Japan, China, India, and Brazil. Although we had a pretty good move upward today in Brazil. So the major stock market indices for the United States and Brazil moved higher again today, and we're pretty much unchanged for most other major regions of the world. Now, we started off today in negative territory as financial market participants responded negatively to some somewhat negative news out of China regarding China's manufacturing sector. And they responded to the latest report regarding manufacturing activity in China, showing that manufacturing activity there slowed again last month. And that's several months in a row now that economic activity in China's manufacturing sector has slowed. But stocks recovered pretty quickly after a report came out here in the United States showing that economic activity in the U.S. services sector accelerated for the second month in a row. And that follows a report that was issued last week regarding economic activity in the U.S. manufacturing sector, so showing that manufacturing activity accelerated for the third month in a row last month. So I really don't care much at all about what's going on in China. I mean, I have one short-term trading recommendation as well as a longer-term speculative recommendation for a company that operates in China. But that's it. And that particular company, their sales and revenues have continued for several quarters in a row to increase at a rapid rate. And the research that I've done indicates very strongly that that particular company is going to continue to grow its revenues and earnings at a fast pace, and that its stock price is going to move substantially higher over the next couple of years. I'm not going to tell you what that stock is because those of you that subscribe to our financial market newsletters that pay us for that kind of information should know the company and the stock that I'm talking about. If you don't, send me an email and I'll give you some information on it. You should already know about that. But, I can't just give this kind of information out for free. Let's see. Looking at some notes here. Now, regarding just the trading action in the U.S. stock market, regarding statistics such as the trading volume, the number of stocks advancing in price versus those declining in price, the percentage of stocks trading above their 200-day moving average. These types of statistics in the aggregate improved last week, and they, for the most part, have been improving for several weeks now. So that's another positive indication regarding what's likely to happen in the future. Now, these types of trading action statistics are only, they don't have much forward-looking value, only for maybe a week or two out into the future. But still, whatever, some positive developments. And one very positive development is that investment newsletter writers, not me, but the majority of them, have become very pessimistic about the near-term direction of stocks. Now you might say, well, did you get that wrong, Frazier? They've become very pessimistic, and that's a positive development? Yes, that is a positive development. that they have become very pessimistic. And the reason being is it suggests that people that were thinking about getting out of the stock market or reducing their stock holdings have likely already done so, and that selling pressures have likely been exhausted. So that's also another positive development. Now, however, on a very short-term basis, once again, price momentum statistics suggest that stock prices in general, U.S. stocks that is, are trading in overbought territory at this time, and that so it wouldn't surprise me if we saw a modest pullback in the major U.S. stock market indices towards the end of this week. But I wouldn't expect that to last for more than a few days. So, as I've said in the past, sometimes this show will be maybe 30 minutes and even longer on occasion when I go over numerous charts discussing the fundamental and economic statistics that we monitor on a regular basis. But on other occasions, like today, it's only going to be a few minutes in length. And the reason being, we don't think this show should be in particular length just to try to entertain you and to waste your time. Quite the contrary, our goal here is to tell you everything that you need to know and nothing more. So hopefully we've done that today, and hopefully we do that every day. We strive to. So I thank you for listening and watching, and I'll speak with you again tomorrow.